We're locked in with Lux Noir Group's List with Mick, and that's me. I'm Mickey Lawrence, your host of today's show. Just my YouTube show. I don't even have an official name yet, but I think it's important that we understand home insurance in Houston, Texas. So that's our topic today. Thanks for tuning in. If you like this type of content, please like, follow, and subscribe. Hit the little share button and share with a few friends. But ultimately, the goal here is to educate you on how to navigate this insurance life and this insurance world when it comes to your property and your home. There are so many people who they buy their home and they have no earthly idea on how do they save money after they buy their house. It's like, okay, they gave me this price. That's what I'm going to pay. And I'm going to pay that for 30 years, right? Wrong. Absolutely wrong. But we're going to dive into all the things insurance today. What every home buyer should know before you close. If you like this type of content, be sure to like, subscribe, and share with a friend. If you have questions, leave them in the comments. I do respond. If you don't get me in the comments or I might be taking too long for you, feel free to shoot me a DM. Like I said, the socials are up here on the page, on the screen, as well as my email. So don't hesitate to reach out. So buying a home in Houston, Texas. We know that this is very, very, very fun, right? Sometimes it's not so fun, but let's put all the feelings aside and, the fun times that we have with that. We really have to take into account what Houston is and where it is located. Houston is located on the Gulf Coast, the Gulf of America, as some people call it, but the Gulf Coast, the Gulf of Mexico. I mean, what do you want to call it? We can call it whatever we want to call it, but y'all know what I'm talking about. We are a tropical city that gets storms. We get tropical storms. We get hurricanes. We are right there with Louisiana and New Orleans with all the catastrophic storms that come through. So we got to think about insurance as a business. These people are risking their money, right? They're risking their money to insure your property. And when a storm comes through, it essentially depletes their bank accounts. So they have to make sure that this profitable or this business is profitable for them. So keep that in mind when we're talking about insurance companies. So that's just a little thing that I like to really hone in on at first. So number one, we want to protect your family's future. So learning how the right coverage or learning what the right coverage is for you so that if something happens, you and your loved ones aren't essentially stranded. A disaster doesn't sit you outside of your home. We like to think back to 2004. And Hurricane Katrina, right? There were quite a few residents of New Orleans who basically packed up, they left, and they never came back. That's likely because there might not have been insurance. There's quite a few families that didn't have insurance. They didn't have coverage. They had to go seek refuge wherever they were, seek safety with friends and family, but there was no check cut to help them get back home. We don't want to put anybody in those situations. That's number one. Number two, saving on those premiums. We're going to talk about saving on those premiums. We'll talk about some strategies that'll help us save money when it comes to paying that premium on that property and still making sure that you get the protection that you need. Number three, making informed decisions. We often make decisions on insurance based off something like what our mom told us or what our parents told us or what the grandparents told us, what our friend tells us. We oftentimes aren't looking at the policy and asking the right questions so that we're informed on what we're buying. We're also going to dive into that as well. Once again, if you like this type of content, don't hesitate to like, share, and subscribe. Because I make content like this for the people. I make content like this for my people, for my community, because I want you to be aware of how to navigate these things. So why do your premiums keep going up? So I'm going to kind of read through this as well as we'll have some dialogue off topic as well. But understanding the forces behind rising insurance costs. Insurance is super expensive, y'all. Like, when you think about it, we pay a lot for insurance. And sometimes we pay a lot for insurance and we never use it. We just pay a lot based on where our home is located. So when you're thinking about where your home is located and if it may cause the insurance to be extremely high, you may want to consider relocating it somewhere else or buying a home in another place. Stay away from the floodplains because we know Houston has them. We're a bayou city. We have the bayous running all throughout the city, and we know that they flood when the rain comes. So don't put your house next to it. So Houston homeowners have, and that was my little soapbox. I'm sorry, I'll get off, guys. So Houston homeowners have watched their insurance premiums climb year after year, often without clear explanations. The reality is that multiple factors are converging to drive costs higher across the region. Understanding these trends helps you make smarter decisions about coverage and budgeting. So more severe weather events. So let's go back to Katrina, 2004 Katrina. Katrina comes along and blows the roof off of your house. You have insurance, right? You got the coverage. You have wind and hail. You have all the things you need to have, flood, all of it. But you still have to pay a deductible. You've paid your premium every month. Now you have to pay the deductible. The roof gets fixed. Let's say that roof gets fixed for 25 grand. You've been living in the house for a year and you've only paid $4,000 in insurance. You know what that means? That insurance company took a loss. What do you think a business is going to do when they take a loss on something? I'm just breaking it down common sense here. They're going to jack the prices up. They're going to take the prices up. They're a for-profit business. So thinking about having those Katrinas and those Harveys and those Sandy, all these major catastrophic hurricanes come through and cause all types of damage in the Gulf of Mexico, of America, of the Gulf. Let's just call it that. The Gulf of ... You know, all this damage that it causes, somebody has to pay for it. And most times it may not be the person who's filing a claim, at least not at that point. Let's also take a look at the rebuild cost. So when you get your insurance quote, you will see something that's going to be a replacement cost for your structure. So if you'd like to completely, like, let's say your property gets washed away by the floods and now it's just a concrete slab, your insurance will pay to get that rebuilt up to whatever your amount is. If you have a $300,000 home with the land included, your insurance may look like $270,000 or $265,000 to rebuild the home on top of that land. Because you already have the land, they just will rebuild the home. But when they're rebuilding and they're taking the roofs off and changing out walls and windows and things that were damaged, those prices, today's prices, just ain't yesterday's prices. Let's just be real. Today's prices aren't yesterday's prices. We face inflation. We face capitalism. We face the cost of goods going up. So when we see those things rise, what do you think the insurance company's going to do? They're going to charge you more. It's going to cost you. Yesterday's price ain't today's price. So in the recent years, we have seen those prices go up somewhat 30, 40, 50%. And somebody has to eat that cost. And unfortunately, it's typically not the insurance company in the long run. In the long run, they're going to make their money. The insurance company also has had losses. Carriers have paid out so much money, and what you start to do, or the way they set up, is they have a bank account for an area. That area covers, let's call it 20 houses. Well, when this $2,000 for these 20 houses is used up, you're seeing carriers cut the ties. They're leaving. They're getting up out of, they shutting down shop, y'all. They getting out of there. They're not going to take any more losses. That's what most businesses do. When you take too many losses, too many L's, you're getting out of there. So a lot of insurance companies have taken losses in these events. Like I said, you may not pay in the short run, but in the long run, that's going to go in your reports. That's going to show when you go and get a new insurance company. They're going to see that you had your roof replaced. They're going to see that you flooded out. They're going to see that you paid, a $2,000 deductible and it was $30,000 worth of damage. They're going to see that you called to inquire about a roof leak, even though you didn't use your insurance company to fix it. That's on your record. That's on your report. So be mindful of these things when you're calling your insurance company. If you got a good insurance rep, just call your insurance rep. Your insurance rep really wants to take care of you, so they can tell you what the game is. I'm telling you, because when I have a problem, I'll call my insurance rep. I'll be like, hey, bro, tell me what is going on with XYZ. And they're going to tell me, or what should I do in this situation? Can you help me strategize how I should make this claim? Or can you help me strategize what I should say when I get on the phone with customer service? Your insurance agent, your insurance rep, whatever you want to call them, they will help you out with that. So don't hesitate to give them a call. If they sold you the policy, call them up, hit them up. One of the key things with insurance is also just being aware of the trends that's going on in the marketplace. If we know that storms come to Houston, and we know that we've had 3 replacement roofs over the last 15 years, we may want to see what's up with that. Call our insurance company and see what they have on file. Call up your insurance agent. Ask them, hey, what's up with my policy? Can you send me my declarations page? Can you send me some documentation on what I'm paying for? What I've started out paying for it 5 years ago or 15 years ago versus today. And that'll be eye-opening for you. It's important to know your policy inside and out. So understanding what's protected and what's not protected. Many Houston homeowners discover coverage gaps only after filing a claim. So you might find out that, hey, I had a flood in my house and now I'm filing a claim for this flood. And you know what? I don't have flood insurance, but I got home insurance. I have coverage for my property, but I don't have flood insurance. So what's typically covered is your standard policy is going to have protection against fire damage, theft, vandalism, personal liability claims. So if somebody's injured at your property, things like that. It also covers your structure of your dwelling, personal belongings. So if somebody breaks into your property and steals all your fine jewelry, that's covered. Any additional living expenses away from the home because it's uninhabitable from a storm, or it's been flooded out for whatever reason, burned down, or whatever the catastrophic event is that keeps you out of your property, you have coverage for that typically in your regular homeowner's policy. Most policies also include medical payments coverage if someone is injured on your property. So like I said before, that coverage for injuries on your property is a real thing. If if you have friends over and their kids are playing with your kids and one kid breaks their leg on your property, that doctor bill can actually be covered for by your insurance. That is key. That is important. So a lot of people aren't aware of that, but you can definitely do that. What's usually not included, flood damage. If you get flooded out, you got home insurance, but you ain't got no flood insurance, you ain't gonna get no check. You ain't getting your house remediated. They are not gonna come get all the mold out, take your sheetrock down, get the mold from behind the sheetrock on the wood. They're not gonna do any of that. You're gonna be doing it by yourself, or you're gonna be paying out of pocket, which is the worst case scenario. Well, worst case scenario is to not pay for it at all because you can't afford it. But to be paying out of pocket is the worst case scenario. You will be doing that if you don't have flood damage as a part of your insurance. Wind and hail from named storms. So wind and hail damage. If the wind comes by and it takes off some shingles of your roof, or let's say it knocks a hole in your roof. The wind gets really strong sometimes in these coastal cities where it's 130, 140 mile per hour wind. And let's just say you now have a big hole in your roof. Well, if you don't have hail and wind damage on your policy, you won't get paid. Got to keep that in mind. Earth movement is also an endorsement. So for my Californians, when you have those earthquakes and your house falls into the hole, or part of your house falls into that hole, to get that house repaired, you need to have it on your policy. If you don't, you might be out of luck, guys. These exclusions are particularly important. Flood insurance through the NFIP or private carriers is almost always necessary, regardless of your flood zone designation. And so when they say it's almost always necessary, for you to get the loan on the property, you got to have flood insurance. Don't be located near a flood zone, near a floodplain, especially 200, 500 year floodplains. They gonna want some insurance. They gonna strongly recommend it. But I highly recommend in Houston especially, get you some flood insurance. Even if you are on a 20, 30 foot hill, get you some flood insurance. I highly recommend it. If you need help or you have questions on who to reach out to, I have several partners that I can introduce you to that are competitive, and they can have you up and running with your home insurance quickly. And no, this isn't a paid endorsement. I just use multiple partners in that space, and I do not mind sharing. So replacement cost versus actual cash value. A lot of times people really get confused on that. So the replacement cost coverage pays to rebuild or replace items at today's prices. Keyword today's prices, while actual cash value deducts depreciation. So for a 10-year-old roof, this difference could be $15,000, $20,000, $30,000. I mean, we're talking about a 10-year-old roof, old technology. There's things that's going to have to be replaced that ain't like it was yesterday when they built it. Codes might be different. So that cost can get up there really quickly. So you always opt for replacement cost coverage on both your dwelling and personal property. So be sure to opt for be sure to always opt for replacement cost coverage on both your dwelling and personal property. Replacement cost coverage on your dwelling and personal property. Singe that into your brain. All right, guys. So don't wait until disaster strikes to discover gaps in your coverage. Because really, in all truthfulness and honesty, ain't nobody trying to be stranded and ain't got the right insurance. Now you got to pay stuff out of pocket and put yourself into a bind potentially, especially with the inflation that's happening now. Who wants to be put into a bind while you're in a disaster? Imagine being in Hurricane Harvey. You don't have insurance. You thought you had insurance. You've been paying on a policy, but you don't have wind and hail and you don't have flood because you've never had to either go through that or you just didn't know. You need to know that policy inside and out. You need to know what's covered. You need to make sure that you are not putting yourself and your family at risk, because that is the ultimate goal. Protect your finances, protect your dwelling, have somewhere to stay, and insurance will help you do that. I encourage you once again, know that policy inside and out. The add-ons that matter most in Houston, y'all. So this is really key. So you can look on this and kind of see what's going on here, because I took time to make sure that this is nice and big print so that you can really soak this up. Essential protections every Gulf Coast homeowner needs. Standard homeowners insurance levels critical gaps in coverage for residents in Houston. Given our proximity to the Gulf Coast and frequent severe weather, certain add-ons aren't optional. They're essential. Hear me out. They're essential for comprehensive protection. Investing in the coverages now could save you from devastating financial losses during the next major turn. Investing in these coverages now could save you from devastating financial losses during the next major storm. And that's real talk. If you invest in your insurance now, you likely won't be paying little to no money compared to the damage that the next storm brings to your property. So make sure you get that insurance. I can't tell you it's a lifesaver. So one of those insurances that's essential for Houston is you see it here. Flood insurance. Flood damage is never, and you know the old saying, never say never, but flood damage is never covered under standard insurance policies. Never covered. So you always want to make sure that you're getting that policy through the NFIP, through a carrier that has a policy through the NFIP as well. Because some carriers actually have flood damage policies, but that's ultimately not in your standard coverage. So be sure to ask for additional questions around that flood insurance. Wind and hail coverage, that's number 2. Make sure that you have wind and hail coverage. We don't want a storm to come through, blow your roof off, blow the top off, and now it's raining in your house and you don't have wind and hail coverage. But you got standard coverage. You're prepared. Moving on from that wind and hail coverage, last but not least is the hail protection. So Houston experiences frequent hailstorms that can devastate roofs, siding, and vehicles. Some insurers now limit cosmetic damage coverage or require higher deductibles for hail claims. Verify your policy includes full roof replacement, coverage for hail damage, not just repairs, but actually all the coverage for hail damage. Consider impact-resistant roofing materials to potentially reduce premiums and improve protection. So we'll talk about that in a little bit, about reducing those premiums with some measures that you might be able to take. So a smart move is bundle flood and windstorm policies with your primary homeowners insurance when possible. With insurance companies, guys, when you bundle stuff together, that's when you get the ultimate savings. They throw you a little discount. You know what I'm saying? It's like that friends and family discount that you get when you bundling those things together. So be sure to bundle it together or ask for your bundled discount. Find the best coverage for your budget is our next piece of this insurance thing in Houston. This thing called insurance in Houston will definitely have you stressed out if you don't have it. But let's dive right in. A strategic approach to shopping for home insurance. The insurance market is more competitive than ever, with prices varying dramatically between carriers for identical coverage. Houston homeowners who take time to compare options typically save $800 to $1,500 annually while securing better protection. So keep that in mind. This is a very competitive market. We'll pause there. This is a very competitive market. We have quite a few carriers in Texas, and they are all competing. So if you've been paying the same policy for the last 3 years, 2 years, heck, even 1 year, you need to start shopping the policies every year. You see, the proof is in the pudding. You can be saving anywhere from $800 to $1,500 a year. So imagine that $1,500 that you've paying over the last 5 years to your current provider, and you could have been saving that. That could have been money for your Roth IRA. That could have been money for your stock market, your stock play. That could have been money going into an investment vehicle to grow your money. These are things that we have to really think of as a community and really evaluate, because if we're not evaluating them, we may be throwing money away. But below is the proven process to really find the balance between comprehensive coverage and affordability. So compare multiple quotes. You guys have heard me say that quite a bit here. You want to get about 3 to 5 quotes, and you're welcome to do more than that, but most people kind of lazy, right? And I wouldn't say that that's lazy, but 3 to 5 is quite a bit. But you might get 10, you might get 7, you might get 15. It's up to you. But get those quotes with the same coverages. Let them know you want the same thing. And then what you'll do is you'll actually look at the prices and you'll compare them dollar for dollar. See what you're getting for that protection. And really just looking at that piece alone, it can really save you some bread. It can save you some cash, y'all. Next, you'll balance price and protection. The cheapest policy isn't always the best value for your family's long-term security. Evaluate each company's financial strengths ratings. AM Best A- or higher recommended. I think that should actually be, my bad, I made a typo there, guys, but A+ is the best, with A- being highly recommended. Claim satisfaction scores and customer service reputation. Read reviews from other Houston homeowners about their claims experience during recent storms. And ultimately, your neighbors are going to be your best friends when it comes to how that claim worked out for them. Your neighbors, your family members, especially when you're talking about big box insurance companies, insurance carriers. You usually know somebody in your family or in your sphere that has made a claim, and they either had a great experience, they had an okay experience, or they just didn't have an experience at all, right? So ask around. That's key. And then the last thing is review the deductibles and limits. Higher deductibles reduce monthly premiums but increase out-of-pocket costs when disaster strikes. So what this means is if you're paying a higher deductible, your monthly premium is going to be low. So that monthly cost for insuring your house on a higher deductible is going to be lower. So let's take house A and house B. For house A, the deductible is $2,500 versus for house B, it might be $1,000. And they'd be looking at saving, let's call it $1,500 annually. But the cost, so let's break this down. The way you look at your deductibles and limits is if your premium is high, your deductible is low. If your deductible is high, your premium is low. It's a seesaw effect. So if your premium is like, they'll usually give you an option where they'll say, hey, your premium is going to be $2,000, but your deductible is going to be $100. So that means that anytime you file a claim, that deductible will be $100, but you're paying $2,000 a month. But let's reverse that. Let's say you're paying $100 a month, and that's your premium. Now your deductible may be $2,000 for you to file your claim. That's a big difference, right? We talk about going from $1,200 per annum versus $24,000 per annum. And these are all hypothetical numbers, but I really wanted to illustrate the point that when your deductible is higher, your premium is lower, and when your premium is higher, your deductible is lower. And the premium is only the monthly fee that you pay for that insurance policy. That's your premium. So a pro tip is, and I put it down here in my notes, a pro tip is request a replacement cost estimate from your insurer or a local contractor. Many Houston homes have appreciated significantly, but policy limits haven't kept pace. So your policy probably isn't keeping up with how much your home is valued at. Underinsurance could leave you financially vulnerable when rebuilding after a major loss. That is important. That is definitely a pro tip. If your cost of your home has escalated severely, you've been in it for 10, 15 years, especially in the Houston market, your replacement cost is $300,000 because you bought the house at $150,000, and now the house is valued at $700,000 or $600,000 15 years later. You know who's on the hook for that money that they missing on the replacement cost? Because of inflation and because of the cost to do business as far as replacing that property with the goods that it takes to repair it or replace it, you on the hook. So that is another reason why you want to make sure that you stay in contact. You want to stay tapped in with your insurance person, your insurance agent. If you look down here where it says key coverage considerations, we have dwelling coverage. It should equal full replacement cost, not the market value. That's important. Personal property, typically 50 to 70% of dwelling coverage. Liability protection, minimum $300,000, but consider $500,000 or more. So if somebody crashes their car into your house or you crash your own car into your house, you can use your liability coverage. Additional living expenses, at least 12 months of coverage. So if you're displaced from your home, you want to be able to be displaced for up to 12 months without having to come out of pocket to put yourself somewhere else or in another dwelling, whether that's a hotel, Airbnb, a rental. It really depends on the insurance company when you're working out where you're going to spend that living expense money. And last but not least, deductibles. Balance affordability with emergency fund capacity. So, for instance, don't be like, "Hey, I'm gonna get this super low deductible, and I'll just pay the high premium." because you're going to spend a lot of money. You may not ever use that policy that year. And the next year you're going to be like, well, you know what? Let me get a low premium and I'll just pay a higher deductible. And that year, that'll be the year that you use the policy. And now your deductible is $8,000 when it could have been $1,500. So just make sure that you're balancing the, affordability with the emergency fund capacity, because you want to make sure that that deductible is something that you typically have in the bank. Ask for these discounts before you sign anything with your insurance agent and your insurance rep. These are smart strategies that protect your family's budget, because ultimately we want to help you save money and gain wealth. You own a home, that home is gaining equity. You can make these other things work for you as well, as long as you're doing your due diligence. Most insurance companies offer numerous discounts that can reduce your premiums by 20 to 40% or more. However, that's the business. That's the funny part. However, many homeowners never receive these savings simply because they don't know how to ask. A closed mouth does not get fed, people. So make sure you ask. Being proactive about available discounts is one of the easiest ways to make home insurance more affordable while maintaining excellent coverage. Bundle home and auto policies. That's one. We talked about that. That can save you 15, 25, 30%, 10% on your bill, on your yearly costs, your monthly costs. That can really impact your bottom line when we're talking about building wealth and saving money. Install security and smart home systems. So if you have a security system in your house and you have some type of smart home system with the cameras and it alerts the police when some suspicious activity is going on, that lowers your insurance price. You pay less for a policy. It states here that you can save anywhere from 5 to 20%. That may be 5 to 30%, depending on the carrier. Remember, we're going to shop all 15 carriers so that we can get up to that 30%, right? Next, invest in home improvements. So making sure that roof is repaired, making sure it's new. If it's been 15, 20 years on that roof, get that joker replaced, get it repaired. It's only going to help your insurance, because the insurance company looks at it like this. Your property year after year becomes a greater and greater risk for that company. So you know who they charge for risk? The end user, and that's you. They're going to charge you for that. Update your electrical systems, modernize the plumbing, make sure you have impact resistant windows, which can significantly reduce premiums while increasing home value. Wind resistant roofing materials and storm shutters are particularly valuable for Houston homes. Document all improvements and request updated discounts from your insurer. So once you've updated these things, document it, take pictures, keep the receipts. And that vendor that fixed it, have them sign off on it, get an invoice from them, a paid invoice, and make sure you just keep up with that, because your insurance company will likely want to see that you actually did these things, or they're going to send somebody out to inspect the property and see that you actually did the things that you said you were going to do. And last but not least, for things that you want to ask for a discount about is optimize your deductible. Increasing your deductible from $1,000 to $2,500 can reduce your payments by 15 to 30%. So if you are in the event you have $3,000, $4,000 of liquid cash just laying around at all times, instead of paying $1,000 a month, instead of paying $1,000 for your deductible, you'll pay $2,500 for the deductible. But that change can save you somewhere in the range of 15 to 30%. So that's just working smarter with your money and not harder, because you can easily throw it away. And with these premiums, y'all, you don't get that money back. Once it's gone, it's gone. So that is important as well. Don't leave money on the table. Review that policy yearly. If you like to look at that policy around month 9 or month 10, start diving into it. Start talking to other insurance carriers. Make sure that you're getting the best deal for your money, because that's where you really find the most value add for savings in your household. So what should first time buyers know? Essential local wisdom So what first-time buyers should know? Essential local wisdom for Houston homeowners. First-time home buyers in Houston face unique insurance challenges that experienced homeowners understand through hard-won experience. From shifting flood zones to the critical importance of elevation and drainage, these local insights can save you thousands of dollars and protect your investment for decades to come. Knowledge is power when it comes to Houston home insurance. At the end of the day, number one, know what the flood zones are. If you don't know what the flood zones are, you are going to be jacked up. So number one thing that you can do yourself is go to FEMA.gov and go MSC.FEMA.gov is where you can go and look at what the flood zones are. Like, where are they? You know what happens every couple years? They change those flood zones. If you've been getting more floods in your area, you might go from being a low risk zone to a medium risk zone, medium risk to a high risk. These things do change. But FEMA updates flood maps regularly, and what was considered safe last year might be designated moderate or high risk today. Like I said, that's a very true statement. With all the storms that we've been getting, you really want to be prepared to know where those flood zones are. And if you don't know, ask your agent. Your agent can tell you. We are able to look in our HAR for Texas, in our MLS, and it tells us, hey, this is a flood zone. It's a 500-year floodplain. Do you really want to stay there? Maybe, maybe not. If you're going to stay there, what have they done? What have they done to mitigate the floods in that area? Because just because you are in a floodplain or a 500-year floodplain, that doesn't mean that your house is going to flood. Because in a new build community, they've already done all of the plumbing work, all the piping, all the things that's going to take the water away from the community and into retention ponds. So when you're driving in Houston, driving through a neighborhood, you see this retention pond, or technically neighborhoods call them lakes or waterfront properties, but these are really retention ponds, y'all. But when you see these retention ponds, what you really want to do is start to make mental notes. Oh, they got a retention pond. So that means that when it rains, it's taking water to this retention pond instead of leaving it in my front yard. We don't want the water in our front yard. We want it in that retention pond. Number two, elevation makes a dramatic difference. So when I talk about elevation, I'm talking about your house being built on 2 to 3 feet higher than the rest of the ground. That sets your home up 36 inches or 24 inches. 1 foot is 12 inches, so 12 times 2, 24, 12 times 3, 36. But that changes the game when it comes to flooding. We don't want our house to flood, so we build it up on a hill. Simple as that. Number 3, drainage and roofing are critical investments. Proper drainage systems, functioning gutters, and well-maintained roofing aren't just about curb appeal. They're essential risk management tools that directly impact insurance costs. During home inspections, carefully evaluate drainage patterns, gutter condition, and roof age. Properties with poor drainage or aging roofs may face coverage limitations or higher premiums. Budget for these improvements immediately after purchases if needed. Many insurers offer substantial premium reductions for homes with new, impact-resistant roofing materials designed for hurricane-prone regions, i.e. Houston. They making this for Houston, y'all. But these are a couple questions right here at the bottom that every Houston buyer should ask. Number 1, what is the property's current FEMA flood zone designation? Number 2, has the home ever experienced flooding or water damage? Number 3, when was the roof last replaced and what materials were used? Because sometimes people get cheap roofing materials and that isn't good. You go from having a 25-year roof for yourself to like a 12-year roof for the next buyer of the home. Number 4, are there any drainage issues or standing water concerns? Number 5, what is the home's evaluation or elevation? What is the home's elevation above base flood elevation? Number 6, Have recent insurance claims been filed on this property? Number 7, the last and final question. You can ask a ton more, but these are some of the most important ones that I picked out. Are there any coverage restrictions due to the home's age or condition? So that's important. Sometimes you might not even see it due to the age or condition. Sometimes it's what's in front of the yard or what's in the yard. Sometimes you'll see coverage restrictions because there's a big oak tree sitting right in front of the house. It's a new build, and the insurance company feels a little fretful that tree might tip over and fall on your house. And now they got to replace the cost of it because you're paying your insurance fees. You're paying your premium every month. They're on the hook for it. So let's talk really quickly about escrow and how that ties into your insurance premium. Escrow is an agreement for money or property to be held by a third party until a particular condition is met. Usually that particular condition for a homeowner is the life of the loan or once the loan is paid off. So your money is in escrow. You'll have your you'll have your principal, your interest, your taxes, and your insurance are all inside of one escrow account. That escrow is held every month until it's time for those payments to be dispersed to whomever they may have to go to, whether that's your mortgage lender, insurance person, the tax assessor for the state, so forth and so on. Well, in all of this, we've talked about how you can reduce the price of your insurance, how you can reduce your monthly mortgage payments via your insurance. So that money that's held in escrow, once you're starting to take that annual deep dive into your insurance policy, you may be able to save that $800 to $1,500 a year on your insurance premium. Now you're able to take that money and do something else with it, because now your escrow is not going to show that you need the extra $75 or $100 per month that comes to it, because you did your homework. Kudos and cheers to you, but you did your homework and you shopped around. So that is the key here. If you got nothing else from all of this, shop around, people. Take action to protect your Houston home. Your next steps for securing comprehensive, affordable coverage. You now have the knowledge to make informed decisions about home insurance that will protect your family's most valuable asset. Don't let this information sit unused. Take immediate action to review your coverage, guys. Explore your options and implement money-saving strategies. Your future self will thank you. I'm gonna thank you. Your family gonna thank you. Your grandparents, your mama, them, they don't want you in their pockets. That's what they want you to have insurance for. Everybody will thank you for being able to do your due diligence and make sure that your insurance policy covers all the things that it needs to cover. So the bottom line here and the key takeaways are standard policies have critical gaps for Houston homes. We talked about it, wind and hail, as well as that flood damage insurance. They're usually not in there. Flood and windstorm coverage are essential, not optional. Want to have that in our policies, want to pay that extra fee for it. Shopping annually saves hundreds to thousands of dollars. So make sure you're looking at least once a year, y'all. Small improvements and discounts add up to major savings. So if you can save 15% here for bundling, you can save 15% here for the new roof, you can save 20% here because you got a security system. Those things add up, and now you're starting to look like, oh man, I'm getting my insurance. I'm getting a whole deal on my insurance, y'all. Understanding your policy prevents devastating surprises. And that, my friends, is one of the probably most important takeaways for you and your family. You do not want to be caught with your pants down there where you don't have enough coverage and you're paying out of pocket and stressing to get back into your house to cover your living expenses for those potentially 12 months that you're out of your home while it's being repaired. These are things that cost you real money, and saving your family that peace, or giving your family that peace of mind and giving yourself that peace of mind, is worth its weight in gold. Look, If you guys like content like this, like, share, subscribe. I will be bringing you content like this on the regular, maybe at least 2 times a week. I'm planning this all out. I got a lot of content that I'm going to ramp up into for you guys. I promise I'm going to try to make the next one much shorter. I didn't think that 7 or 8 pages of content would take me, through this much of a deep dive, but I'm so grateful that you stayed in there, you stuck with it, you listened to me, you heard me out. But once again, you can catch me on my socials at List with Mick. That's on Instagram, Twitter, X, TikTok, practically everywhere. And then on Facebook, I'm Mickey Lawrence the Realtor. Look, until next time, y'all be safe, have a good day, and yeah, we're out.